Good morning, welcome to Nifty Prediction. My name is Narendran. To join my WhatsApp group, I'm charging 1,000 rupees per month. You will get advanced prediction as well as calls in the group. Before going to the Thursday's prediction, I will like to review the Wednesday market. Nifty ended up in the positive 13,601.10, 134.80 points in the positive, 1.00% in the positive, opened around 13,473.50, and that is the key because it has opened, the pre-open is above the previous closing, which is positive. And I have said clearly, if anything opens in the positive, it is going to be a positive. Anything open 1 point in the negative, then it might go bearish due to some indications. And the low is around 13,432.20, high around 13,619.45. Let's go to the prediction review. And we know all indications shown positive in our data, but it is around 11%, which we know it is not going to be that much. But we know if it is opens anything above the previous closing, it might go to certain extent or up to pivot level, and that is a normal trend. But we have the indications that we need to play much more cautiously. I have specifically told that bearish and bearish, those volatile level came inside the positive, which means it is restricting the extreme bullish, because positive level is around 254 and bullish open target 400 480. So those kind of things won't happen because of these restrictions. And I have specifically pointed out, if anything opens 1 point in the negative, it might go bearish even up to 400. But today clearly the market, pre-market indicated it has opened in the positive, so negative bearish is rolled out. But still we need to keep this stop loss negative average, because normal, that is, these are all the basic rules. If you want to sell, you need to keep stop loss in the positive average. Those are all the basic rules. If you want to buy, you need to keep stop loss, because the extreme up to that level, it will having the chance to recover, and extreme up to that positive, it has chance to fall down. The basic for the pre-opening buying and selling stop loss is different, which is anything open above that level, we used to keep support on stop loss. Anything opens below that level, we used to keep resistance on stop loss for selling, and support level 1 for the buying. These are all the other basic rules. And we know the volatile level, anything opens means we keep overall average. But this specific day, it is clearly shown that the market is supporting the positive, because all four indications indicating positive means we must have to open 1 point positive. So today that positive is supported. That is the reason the market has recovered from the low, even though it has opened and went down a bit, but not able to break the negative level, and it has moved from that level towards to the resistance level 7, which is 13,603. It has closed in that particular 137 range. Let's go to the prediction for Thursday. It is clearly indicating volatile market, so we need to play much more cautiously, and you must have to keep both side options. And in the volatile option, what it's indicating is you need to book every now and then. But at the same time, on Monday we saw some kind of extremely bearish, that is quite having chances to happen, but to some extent. So that we need to play much more cautiously. So how we can able to book those kind of big profit? For example, if you are buying some 10 rupees in the options, any options, put option or call option, uh, I'm talking about how to book those huge profits. So most of the people are buying 10 rupees and exiting somewhere if it is goes 20 or 25, because it is double the money. So but it is gone on Monday from 10 to 270. How to get those big profits without making a mistake of exiting at 20? So it is very simple. You need to buy two lots. Most of the time this error many people are doing, buying 10 rupees and exiting 20 or 25, then after that market is going to 200 or 300, something like that, Bank Nifty or Nifty. So how to avoid those is very simple. You need to always buy 2 lots minimum for 10. If you're having huge amount of money, you can buy, depends on how big your risk appetite, according to 30, 40, even 100, or also you can able to do this method. This method will protect your money as well as give you a huge profit. So 2 lots of buy, this is the way I always do, 10 rupees. So what you can do is that once this particular one lot is gone up to 20, exit one lot, keep that remain one lot always there, because you covered your principal with this. So you entered with 2 lots, 10 rupees each, so one lot you're exiting as 20. So your principal got it, and your remaining one lot is there in the market itself. So wait that particular lot, don't worry about whether it is going to be 0 or something. Fix your which amount or how much the market is going to go, something. For example, we know about the market might have chances to fall around 700 points, but it was not happened 700 point fall. It has fallen down more than 500 points, which is good on Monday. So we expected 700 points downfall on Monday, so that is the reason we used to keep some lots in the option, and we booked some big profit. So like that, this method will give you a profit, because when we know it is going to be 700, you need to have at least one lot. So this 10 rupees might go 200, 300, something like that. So that day it went up to 70. So this method will always give you protection. So that kind of a combination is having. But what are the other possibilities on this Thursday? It might go heavily too, but at the same time it might having the volatile. So how you can trade on this particular, you need to have both lots in the both call option as well as put option. So both sides you need to keep, so two lots each. So which means 10 if you are investing means 40 rupees, maximum 3000 is your bet. But what you have to do is that every now and then you need to book the profit. Once it is going one lot up to from 10 to 20, either side, whether it is going to be on the call option or put option, because the data is showing like that. So it might go in the call option as well as put option. So one lot you exit at 20, the remaining 10 rupees will somewhere around 5 or something. Once again the volatile will happen. So after that, this 5 will go to 20. Definitely from that 5 to 20 it will move. So that time you exit here one lot at 20. So remaining both side you will have one lot each. So this method will give you a freedom to book huge profit once the breakout is happening on the positive or even in the negative side. Whichever side is breakout is happening, you can able to make some big profit. But the maximum risk what it has, if the movement is not very big, the movement is very much limited, anyhow you will get one exit. So one remaining lots will become shrunken, and then it will go to 0. So maximum you will have the loss of 20 rupees, because one lot anyhow you will get 20, remaining 20 rupees, because you are investing 20. So you already exited, anyhow the one exit for 20 will come either call option or either put option. So your 50% of the amount will be secured. Remaining 1520 rupees only, the maximum risk will be in this kind of method. So this will give you a freedom to exit with the big profit if it is works. If it is not works and the market is not moving much as expected, it will be a limited movement, then the loss will be minimized to 20 rupees. So we will exit it with 50% loss, and that is you can recover in some other day. So this method will give you a good advantage to make money. And let's see how it is going to be in the resistance and support levels. These are all the resistance and support levels. If the market is opens in between these volatile levels, it is indicating the volatile market, but it is very less 0.32 to 25. So even if it is opens in between which side it is going to break, according to that it will go to bullish or bearish. So we need to watch out whether it is going to open inside the level or not. If it is opens inside the level, then after that, if it is breaking, then up to bullish open target level, the market might have chances to go. Before that, if it is not breaking, if it is not able to break this resistance level 2 or frequency level, it has a chance to fall down towards negative. That is also a notable point. On the other end, if the market is opens above volatile level 1, which is more than 32 points, we need to keep stop loss in the range of 13,623 minus 10 points, which is 30,613. But it is, we know the data is clearly shown in the volatile, so we need to keep stop loss in the support level 1 as well. That kind of a stop loss also we can maintain, which means if that particular stop loss 30,000, okay, we need to check out this is the average. So we need to keep stop loss in the range of 13,614, which is 13,604.7. that is the one kind of stop loss which is the overall average not breaking. It has a good chance to go up to positive average. If the overall average is breaking, means normal stop loss we can maintain at the support level 1, which is 13,595 minus 10 points, which is 13,585. This is another stop loss we can put for the bullish market. If those levels are not hitting, means the market will having chances to close in the positive itself. But we know it is a volatile market, so keeping those stop loss will always get hit those two levels as well. That is the reason we used to advise to buy both sides. So the next method, which is for the bearish market, volatile level 2, anything pre-market opens below that level, indicating the bearish market with a stop loss of overall average or the resistance level 1. This time you need to add 10 points as a stop loss from the set level. So what happens is, if the market is not able to break bullish open target level positive average, which is 7400 and 119, those levels are not breaking, market having chances to fall down towards to negative. Likewise the same, if the market is not able to break the bearish open target level negative average or bearish level, which is 84.116 both bearish level and no negative average, both are same. So if not able to break this level, market having chances to recover. But if it is breaking, it might go heavily on the downside. Even 400 600 points is also possible. Up to 13,070 is also possible on this particular day. So that is the reason we are asking to keep both side options in hand and take a small chances, book one profit and exit with the profit, and keep one remaining lot with the huge chances to fall down. If it is happens, it might go to that particular level. So let's see how the market is going to give us on Thursday. Thank you.